Hello guys. I hope mko poa. So let us continue with our preparation of the final account of the company. So we had already we did some question, or at least we did one question in our previous class. So today we're going to add at least two questions so that we see how different questions can be tested. So today we are going to do the question for April 2023, question number 4. So April 2023, question number 4. So April 2023, question number 4. It's still under preparation of the final account. Preparation of the final account. So preparation of the final account of the company. So let me read the question. So the following trial balance was extracted from the Bahati Limited as at 31st March 2023. So we have the trial balance, as you can see there. Now additional information. The company maintains a gross profit margin of 20%. And then as at 31st March, account receivables balance equal to 50 due to customers who had been declared bankrupt. That's a bad debt. Then allowance for doubtful debt was adjusted to 5%. Then as at 31st March 2023, administrative expense accrued amounted to 175. Then they had a prepayment, selling, and distribution expense of 75,000. The company paid an interest on debentures for the year ended 1st March 2023 on 5th April 2023. So that is the interest was paid during that year. Was paid after the year end. So it was paid after the year end. That one is okay. So it's accrued. That one is also accrued. Interest, which we shall put it in our statement. Then depreciation is provided as follows. So building 2%, fixtures 10%. Then the company director proposed that preference share dividend be paid. Then a dividend of 10% ordinary shares be paid. Then we have a transfer of 2.5 to the general reserve. So from the retained earnings or the revenue reserves to the general reserve. So this one is from the revenue reserves to the general reserve. Number one, we are to prepare to find the value of the inventory. That is the closing inventory. Then the statement of P&L, and then the statement of financial position. So we start with the first one. We start with computation of inventory. Computation of inventory. Computation of inventory. Okay, so the question is for the question is for AP 2023, question number 4. So AP 2023. April 2023, question number 4. Now we start by determining the value, number A, value of inventory at the end. So we know if we get the inventory, so it's the cost of sales is equal to the opening value or the opening inventory. Opening inventory plus purchases. Purchases minus closing inventory. Inventory. Now let's go to our question. Let's go to our question. Now, if you go to our question, wanatuambia nini? That do you have cost of sales? Cost of sales, it is so information number one, you have a gross profit margin of 20%. Now, if the gross profit margin is 20%, now if gross profit margin is 20%, it means that 20% of the sales, the gross profit margin, 20% of the sales. So what's our sales in our trial balance? If we go to our trial balance, our sales is 120,000. 120,000. So how much is that? 120,000. 120,000. So 20% of 120,000, that one will be equal to 0.2 times 120,000. That one is 24,000. 24,000. So this is our profit. Now this is our profit. Remember gross profit. This is our gross profit. Remember this one is our gross profit. So gross profit, 20% of that one will give us gross profit. Remember gross profit is equal to sales minus cost of sales. So kumaanisha if our gross profit is 24,000 and our sales is 120,000, what will be our cost of sales? Now our cost of sales itakuwa ni 120,000 minus 24, which is 96,000. So tumepata our cost of sales as 96,000. So you use this formula. So cost of sales unajua ni opening stock plus purchases minus closing stock. So we know that our cost of sales is 96,000. Our opening stock from the question, tukienda huko juu, our opening stock on first A period 2022 pale juu anatuambia ni 10,500. 10,500. And then we add purchases. Purchases, I think is purchases also pale kwa swali na draw balance. So our purchase in our draw balance pale juu ni 105,500. 105,500. There is no any other items which affects these items in our additional information. So no any other item or pale juu pia ama tuko na return outwards. Do we have the return outwards? Yeah, return equal 2,000. So lazima tulesi hiyo 2,000. So yeah, we return outwards 2,000. Yeah. Do you have any other thing? Drawings hakuna. So kumaanisha we shall get our cost of sales. So let us give our cost of sales. So cost of sales itakuwa ni 10,500 plus 105,500 minus our return outwards, then plus, so ikuje the other side, plus 96,000. So what will be our cost of sales? So kama kawaida unachukua calculator, so we do it together. So 10,500 plus 105,500 minus 2,000 plus 96,000. So mimi napata 210,000. Cost of sales as 210,000. Allah. Hii ni maajabu. This is supposed to be minus actually. So huyu plus huyu minus huyu then uko minus. It's supposed to be minus. Bado tuliweka plus, so hapo tulifanya makosa. 18,000. So our cost of sales is 18,000. So our cost of sale, not our cost of sales actually. What am I doing? Our closing in inventory. Closing in inventory. So this is supposed to be our closing inventory. Our closing inventory will be equal to that one inafaa iko hivyo. Ama closing stock. You can use the word closing stock. Nimetumia hapa. Nimetumia the word closing, so just put closing inventory. So that one is fine. So tunasema 20% of 120 is to be our gross profit. So remember our gross profit is sales minus cost of sales. So gross profit is 24,000. Our sales is 120. We less to get cost of sales as 96,000. And remember the formula for cost of sales. Cost of sales is equal to opening stock, or we want to use the opening inventory because they are using the word inventory. Opening inventory plus purchases minus closing stock. Now, but remember purchases is affected by other things like drawings, return outwards, blah blah blah. In this case, we had a return outwards, so that's why we reduce the purchases. Now 96,000 is our cost of sales is equal to our opening stock 10,500 plus our purchases 105,500 minus the return outwards, which will reduce the purchases minus closing in inventory. Now let us make closing inventory our subject formula. So e closing inventory kuja the other side huku, then 96 ende huko as minus. So when you do the sums, you shall get this figure. That is number one. that is number one, how you are supposed to do that part. So number B, you can prepare the P&L account. P&L account. P&L account. I think you can share the board there. So P&L account. So this account is for which year? So this is for kwanza jamaa anaitwaje? Bahati Limited. So Bahati Limited profit and loss account. So we say Bahati Limited statement of profit and loss. Statement of profit and loss. Period. Profit and loss for the year ended at 1st March 2023. For the year ended. Ended that 1st March 2023. So I think the total balance is in thousand. Let me confirm. If the total balance is in thousand, yes, the total balance is in thousand. So I think we can use that on the way it is. So Kenya shillings and Kenya shillings. I think that one is okay. Yes, that one is fine. So we can start with our sales. You can start with our sales. Or rather, we can start with the gross profit actually. We can start with the gross profit because already we have the gross profit. But let me, we can also start with the sales. Let us just start with the sales. Let us just start with the sales, so as to have the normal account. So our sales is 120,000. Now there was no any other items which affects sales in this question. So directly go to less cost of sales. So kama kawaida tunaanza na opening stock or the opening inventory. Opening inventory in this case, opening inventory, it was 10,500. Then we are supposed to add the purchases. Purchases will go on 5,500. 105, 500. Then we are supposed to less the return outwards. Return outwards. It was 2,000. Then cost of goods available for sale. So cost of goods available for sale. So we can get that one. So we use our calculator in that case. So the 10,500 plus 105, 500 minus 2,000. This one is 114, 500. Now we can less closing stock, our inventory. So our inventory, closing inventory need to report up 18,000. 18,000. Mimi nafanya nini? 10,500 plus 105, 500 minus 2,000. This is supposed to be 114,000. Then to less 18,000, we get with the cost of sales as our 96,000. Ndio hii hapa 96,000. Iko wapi? Ndio hii. This one. Now we can get our gross profit. Profit. Now 120,000 minus answer, which is 24,000. 24,000. That is okay. So up to that point, we are good. Now we are supposed to add other income. So add other income. The first income we always check if there's a decrease is provincial for bad debts. So start with the working for provincial for bad debts. Provision for bad debt. Provision for bad debt. Provision for bad debts. Now for provision for bad debts, in our statements, information number, our additional information number 1, not number 1 rather, number 2, we have an account receivables of 250,000 which was to get bad debt. That is okay, but allowance for bad debt is 5%. So 5%. We multiply with our receivables account. So receivables account tunaenda huko juu. Receivables huko juu ni ngapi? Account receivables is 8250. 8250. Remember to raise the bad debt in our additional information. So remember to raise the bad debt in the additional information alone. So it is in thousand, so it is 250. So it is in thousand, tunasema 250. Itakuwa ni 8250 minus 250 times 0.05, which is 400. Now let us see the provision in the outer balance. Provision for bad debt in trial balance. So we go back to our trial balance. So we go back to our trial balance where we check the value for provision for bad debts or the allowance. It is 450. So allowance is 450. So during the year ended, so last year ilikuwa 450, imekuja 400. So ilikuwa 450, ikakuja 400. So we have a decrease of 50. So this decrease is an income. Decrease of 50. Tunakuja nasema hapa decrease of allowance for bad debt ni 50. So hiyo tumemaliza na hivyo. Now you can check any other income in our trial balance. So in that case hakuna any other income. So tukienda kwa trial balance yetu, I can see we have a discount received. Hiyo peke yake ndio unaona. Discount allowance is an expense. So discount received in 325. So no any other expense. So discount received 325. So we add them together so that you can get total income. So 24,000 plus 50 plus 325. Inakuja ngapi? 24. 375. Now we can less our expenses. So less expenses. So now we can less our expenses. We can less our expenses. So tunaanza na hii yenye tulianza hapa, bad debt ya tunaanza na hiyo bad debt ya 250,000. So remember allowance. If allowance was there in a previous year, do not consider the allowance for bad debt. If it was there in the previous year, do not consider it. So in this case, we are not going to consider it because we shall do the comparison. So that one we tunachana nayo. We can go to the next expense. That one we can start with the additional information first. So additional information number 1 is about profit margin. We know number 2 is the bad debts tumeweka. Number is allowance. So we have done the allowance. Number 4, we have the admin expense accrued 175. So we have an accrue of 175. Now let us see the admin expense in our trial balance. So admin expense in our trial balance is 3650. 3650. So tunasema hapa admin expense 3650. Then remember to add the accrual. So remember to add the accrual of 175. So when you add the two, itakuwa ni 5 ngapi? 5238. So 3825. That's additional information na hiyo. Tena tunaendelea, we have selling and distribution expense. So that's a prepayment. So prepayment is supposed to less it of 75. So tunaenda kujua selling and distribution expense ni 4175. So selling and distribution expense in our trial balance and distribution expense ni 4175. So we less the 75. So 4175 less the 75. So hiyo inatoa 75 itabaki 4100. 4100. So still additional information. Let's see if we have any other expense. We have debenture. So debenture we shall do it later. Just hiyo tuiweke a pending kidogo. So debenture we shall do it later. Let us put it pending. So we can do depreciation. So tuanze na building. So depreciation for building. So in exam wewe weka depreciation in full. So mimi andika hivyo for now. So depreciation of building atuambia 26%. 26 ama 2%. Depreciation of building 2%. Now 2% is it on straight line basis? Let us check if it is on straight line basis. Yes, it's on cost meaning straight line basis. So building huko juu ni ngapi? Building where is that building cost? Building cost ni 22,500. 22,500. So where is that calculator? So 2%. So 0.02 times 22,500. So mimi napata for finje. Call it for 50. For 50. And then also depreciation of what? Wanatuambia at information number 3. We have depreciation for fixtures. Furniture and fixtures. So I call it fixtures. Na ni ngapi? 10%. Now 10%. Then about 10% on reducing balance. So if it's not reducing balance, then we shall not use the cost, but we shall use the value after we remove the accumulated depreciation. So let us see. Tuende huko juu. Furniture and fitting is on cost 6,000. So remember that one is the cost. So we need to, so it's 6,000. But remember, because it's on cost and the question is reducing balance, you need to less the accumulated. It is 1,400. So accumulated depreciation is 1,400. So how much is that? 10% of that figure. So tunasema ni 6,000 minus 1,400 times 0.1, which is 460. 460. I think that tumemaliza hivyo. I think we are done with the additional information. Now we can check for any other items in the trial balance that we have not included. So tunaanza huko juu tukiteremka. Ordinary share capital, that's a balance sheet. Preference shares balance sheet, share capital balance sheet. 80% debenture is a balance sheet, but remember interest on debenture, we shall need to account for it later. Account payables balance sheet, account receivables balance sheet. Sales tumefanya, purchase tumefanya, overdraft, bank overdraft, that is an item for balance sheet. Discount received, we accounted it for discount received to kweli. Yes, 325, that's an income. But you have discount allowed chini yake hapo 125. That's an expense. Discount allowed ni 125. Discount allowed 125. Tumeruka building balance sheet, fixture and fitting balance sheet. Accumulated depreciation, that one itaenda kwa balance sheet. In inventory balance sheet, return of tumefanya directors fees. Directors fees hiyo mpaka tuweke. Directors fees. Directors fees ni ngapi? Directors fees hapo naona ni ngapi? Let me counter check again. Directors fees 1,000. Directors fees 1,000. That's the correct amount. 1,000. Yeah, tukitoka kwa directors fees tunateremka. Admin expense we have covered there already. Selling we have covered there. Then we have the bad debt written off. Now we have bad debt written off ya 100. So we are supposed to add it with the other one. So kumbe ilikuwa mbili. So the one in the additional information ni 250 the one that will balance 100 inafaa ikuwe mbili, so itakuwa ni 350. Allowance for doubtful debt tulisema hiyo tunafanya comparison, so we ignore that one. Retained profit, that one is for balance sheet. And then investment at fair value, also balance sheet. Now we can get the profit before interest and tax. Let's get profit before interest and tax. Profit before interest and tax. So profit before interest and tax. Profits before interest and tax. So tukishafanya hivyo, now we can remove the interest then tax later. Okay. Unaona tunasonga vizuri. So to 24 375 24 375 minus 350 minus 3825 minus 4100 minus 450 minus 460 minus 125 minus 1k 14065. So this is our profit before tax, 14065. Now we can comfortably less interest expense. So interest expense in our question kienda kwa swali letu pale juu, now we have a debenture. That debenture is what will attract interest. So 80% debenture, so the interest is 80% of the total value. So 80% of 2500. So 8% of 2500. So 0.08 times 2500. So we are supposed to less this 200. So that you can get profit before tax. Profit before tax. So 14065. 14065 minus 200. So 13865. 13865. That one is okay. Now we can less our tax. So the tax is 30%. So we are in Kenya. So hata kama wajituambia mambo na tax. So automatically the tax is 30%. So tax paid. We just say less tax because it can be paid or not paid. Less tax. So it's 30% times 13865. So times 0.3. Then is 4159.5. So the profit after tax. Profit after tax. So 13865 minus answer 9705.5. 9705.5. Now we can prepare the retained earning account now. So you shall allow me to have this part, this side, because we need to prepare the retained earnings account, and then balance sheet. I will prepare the balance sheet in this side. So balance sheet in the yaka this side. So retained earnings account the yaka this side. Now I think I can comfortably have this part so that we can prepare the retained earnings account. So that we can prepare the retained earnings account. Now kama kawaida retained earnings account, you start with the balance brought down. So nilikuwa nimewapatia format. So retained earnings account. Other people call them the surplus account. So other people call them the surplus account, depending. So we start with the balance brought down. Now our balance brought down is 9050. Now we're supposed to add our net profit. Add net profit. Net profit. So our net profit is the profit after tax. So or you can call it the profit after tax. Profit after tax. Other people call them the net income. So other people call them the net income. So 9705, 9705.5. So we add together. Tapata 18755.5. Let me confirm. 9050 plus 9705.5. 18755.5. Now let us see the proposal by the directors. The first one, the preference shares to be paid. So preference shares is to be paid. Tuanze na hiyo wa kwanza. Be less preference shares to be paid. Preference shares to be paid. To be paid. Now it is the 10% of the preference shares. So unaenda huko juu, so the interest on the preference shares. So unapanda huko juu. Ukipanda huko juu unapata preference shares 10%. So 10% of 2500, 10% of 22,500 is 250. So that is the interest to be paid. And then another proposal there naona information number 7, dividend to be paid, ordinary dividend. So less ordinary dividend. Less ordinary dividend. So that's dividend. So preference dividend. Preference dividend. Dividends to be paid. Then ordinary dividend to be paid. Wametuambia pia ni 10% of the ordinary dividend. Na hiyo ordinary dividend tunaenda huko juu tunaangalia. Ordinary dividend huko juu tunaona ni ngapi? Ordinary ni 15,000. 10% of 15,000. Hii itakuja ni ngapi? Itakuwa ni 1,500. 1,500. 1,500, and then tunaweza malizia nao na transfer. So there was a transfer somewhere. So we let's transfer to general reserve. Reserve. I think it was 2,500 if I'm not wrong. So that you can get the balance carried down of the retained earnings. So balance carried down of the retained earnings, so that you can prepare now the balance sheet. So balance brought down of the retained earnings. So hiyo ni 18,755.5 minus 250 minus 1,500 minus 2,500. 14,545.5. This one is 14,545.5. Now you can prepare our balance sheet. You can prepare our balance sheet there. So tutasema Bahati Limited. Bahati Limited. Statement of financial position. Statement of financial position as at 31st March 2023. Remember it is in thousand. Kama kawaida unaanza na non-current assets. Non-current assets. Non-current assets. So kama kawaida you start with the non-current assets. So non-current assets. So tunaanza na tunaweza go to our balance, then tunaweza consider. So for non-current assets we have number 1, building. So we have building. Building. Remember the building was at cost. So remember the building ndio hii hapa. Building it was 22,500. 22,500. Now remember it was at cost. So kumaanisha we need to less our normal depreciation of 450. And remember also to less the accumulated depreciation. Now accumulated depreciation for building is 6250. 6250. So utapata hiyo figure. Peleke hapo. So tuweke. So itakuwa ni ngapi? So itakuwa ni 22,500 minus 450 minus 6250. Mimi napata figure 15,800. So 15,800. But let me check if the board is you can see the board. Let me check the board. I think the board is fine. Yes. So building, that's one of the non-current assets. The next non-current asset we can see there. The next non-current asset is fixture and fittings. zilikuwa tu mbili, so mimi nasema tu fixtures peke yake. Na for fixtures the cost was 6,000. We can less our depreciation of depreciation ilikuwa ngapi hii? Ni 460, I think it's 460. Then you can less the accumulated one. Accumulated depreciation for fixtures ni 1,400. 1,400. So 6,000 minus 460 minus 1,400. So it's 4140. 4140. I think that one is okay. 4140. 4140. I think tumemalizana na current assets. What about the investment at fair value? I think that one is tunaweza hapa. Investment at fair value. Investment at fair value iko pale chini kwa watu wa balance, pale chini 4,000. I think we can go to current assets. Current assets. So current assets kama kawaida tunaanza na start with the inventory. So our inventory ilikuwa ni 18,000. 18,000 kama sijakosea. Haya, tukitoka kwa inventory tunaenda kwa receivables, account receivables. So account receivables. Na kumbuka account receivables huko juu ilikuwa ngapi? Ilikuwa ni 8250 if I'm not wrong. Account receivables it was 8250. 8250. We were supposed to minus the bad debts in our additional information. So the bad debts in our additional information ilikuwa ngapi? 250. Then there was allowance for that year of 400. You lazima ukumbuke ku minus. It must appear there. So 8250 minus 250 minus 400. So 7,600. 7,600. Haya, tukimaliza hiyo, I think there is now nothing else. But we had a prepayment here. This one. Prepayment. So selling and distribution prepayment. Selling and distribution. Prepayment. So tumelipa excess. So that excess go to ni an asset. I think tumemaliza na hizo. So we can add them to get the total assets. Total assets. So total assets, so 15,800, 4140, 4,000, 18,000, 7,600, plus 75. Napata 49, 615, 49, 615. Then you can go to finance to buy. Finance to buy. So kama kawaida we start with the ordinary share capital. Ordinary share capital. Now ordinary share capital itabaki vile ilivyo. There was no any items affecting it. So itabaki kama ngapi? Koja, let me see kwanza before to conclude. Ordinary share capital. I think we need to open the ordinary share capital. I think itakuwa affected na haitakuwa affected, itabaki hivyo. So there is nothing affecting this account. 15,000. Tukiwa kwa ordinary share capital, tunaenda kwa preference shares, itabaki hivyo pia. 10% preference shares. 10% preference shares. 2,500. Share premium 2,000. Share premium. 2000 kutoka kwa share premium. 80% debenture, that one is that will go to that one's a non-current asset, non-current liability. Account payable ni current liabilities, receivables hapana. But we have one item, this one, the retained earnings at the end. So retained earnings it's ngapi? 14 505.5 14 505.5 14 505.5 14 505.5. Aya, I think hadi hapo tuko sawa. I think tunaweza enda next. I think tumemalizana na mambo na equity finance. This one is equity. Actually ungeandika hapa chini. Hapo ungeandika finance by. Let me just write finance by. So tunaanza na equity. And then non-current assets. Non-current liabilities, sorry, non-current liabilities. So it is 80% debenture. Debenture. 80% debenture kwa naona ni ngapi pale? So 80% debenture huko juu, 80% debenture 2500. 2500. Alafu hiyo debenture iko sawa. So tumemezana hiyo, tunaweza tu current liabilities. Current liabilities. Tunaweza na payables as the common one. Payables. Now payables, nikiona pale juu naona kuna payables 3325. 3325, and then we can check prepayments and accruals, and then also we have bank overdraft. Before sahau, bank overdraft. So bank overdraft ni ngapi? Bank overdraft naona ni ngapi? 1000. Alafu pia you can check on this item accrual. So admin expense accrual. So the accrual ilikuwa 175, I think 170. So tunaweza weka hapa 1 actually, okay, sawa, 175. And then you have other accruals. And a good example hapa ni tax. So tax in this situation it is not paid. This one. So it is not paid. So 4159.5. What else is not paid? So what else is not paid? So what else is not paid? Let me see. I think the dividends pale. So easy to be paid. So they were to be paid. So they have not been paid. So it's an accrual. So tuna add hiyo to 50 also to be paid. So kuna hiyo to 50 which is also to be paid. Gani ingine naona hapo? We have 1500. We have na kuna kitu tumeruka. Sawa sawa tu. So we have 1500. We have 50, so 250, 1500. And then kuna hii reserve wa. So hiyo ndio naweka tu hapa. Supposed to be this side but ndio naweka tu hapa. Ama you allow me to rub. Niweke 8% debenture 2500, and then hii kuja hapo. So hapo kuna ka small mistake. There's a small mistake. So kwenye nitafanya nitasema 8% debenture. Debenture. Then niseme hapa juu non-current liabilities. Then general reserve. General reserve 2,500. So general reserve, you have a general reserve of 2,500. General reserve 2,500. Now, so tumesema tuko na tax ya ngapi? 41.59. We have this one 75. Not 75. Where is it? Yes, 175. This one. Need to make up 175. That is fine. And then we go to 50 na 1500. To 50 na 1500. So to add them together, so 4159.5 plus 250 plus 1500. This one is 5909.5. So I think when you add them, you say total equity and liabilities. Let us add them together to make out the same answer. So 15,000, 2,500, 2,000, 14,545.5, 2,500, another 2,500, 3325, 1,000, 175, 5909.5. So 49 for 15. 49 napata 49 for 15. 49 for 15 napata 49 for 15. Which item tumeruka? Acha tuone the difference. 419,615. Sorry, 49,615 minus 49,415. Tumeruka an item of 200 Kenya shillings. An item of 200. That's 200. That item of 200, there's a 200 which we have omitted. What could be that item? Let's go back to our. I think it's the interest. Where is the interest actually? Yes, it is the interest. Now this interest, it is not paid. This interest, it is not paid. That is it. So information about the company paid an interest of for the year that first March on April. So April ilikuwa mwaka ilikuwa ishaisha. So on April already mwaka ilikuwa. So hii when you finish March our financial year. So after March we need to prepare the statement. But now walilipa after the financial year. So that after the financial year ni kumaanisha this was an accrual. The reason why? Because it was not paid at the stipulated time. And then we are supposed to add it here. So you add also the 200 because it's an accrual. So plus 200 because it's an accrual. So you need to add it. Tunasema ni 4159.5 plus 250 plus 1500 plus 200. So it's supposed to be 6109. 6109.5. So that ikupatie 49,615. It was not paid. So that was an accrual also. So interest and tax in most cases was zinakwanga ni accruals. So interest and tax in most cases zinakwanga ni accruals. So that one marks the end of the question for April 2023, question number 4. Now we need to do another question where we have suspense account. So you need to do another question in the case where you have suspense account. In the case where we have suspense account. So we need to do another question where we have suspense account. That one is very, very important. That one is very, very important. And the question is for August 2022, question number 4. 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 Question number 4. MLO Ltd. So it's MLO Ltd. Suspense account and liquid actually. This is the spelling for the suspense account. So that question is for August 2022, question number 4. So that one is next question that we are going to do in the next video. So video 1 is about question for April 2023, question number 4. Then video next will be about the suspense account. So let us meet in our next class. We discuss about the suspense account question and we see how we can do it. So have a nice time.